actually lower by 0.3%. So the Nifty has done a recovery to off close to 80 odd points. The Sensex, on the other hand, is also trading in positive territory, 0.3% higher, 71,572 is what we've got. Bank Nifty around 48,000. Remember, that's a critical level of support coming in for Bank Nifty. It does trade around those levels as we speak, 124 points higher on Bank Nifty as well. So across the exchanges, what we've noticed is all of your frontline names are off their day's low point. The broader markets, which actually opened gap up, have now turned negative. So while the broader markets open negative, they are positive, they've turned negative, while the frontline index has actually turned positive after a gap down opening we saw in morning trade. Well, let's quickly take a look at the breadth of the market as well. That's improved substantially since we opened trade this morning. The bias is towards the gainers as opposed to the losers. The biggest gainer of the day is Nestle, and that is the heavyweight that has helped the Nifty turn into positive territory. 4.5% on Nestle looks very well placed in today's day of trade. We'll try and get a view on that counter technically and fundamentally, but they've announced the stock split, which is going to happen in early Jan, on back of which the counter is looking like it's in a sweet spot. Coal India is up 4%, ITC. So your consumption names across the board are doing well for more reasons than one. Nestle, ITC, Devyani, Britannia are some of the names that are trading in deeply in the green. You've got Coal India, NTPC, some of your banks have turned positive. Telecom names like Bharti aren't doing too badly. Financials are also trading with a sort of a mixed session that we are picking up on this afternoon. On the sell side, tech looks soft. Remember, all eyes on Accenture's earnings, which will be reported US time. So IST 6:30 p.m. is what we're going to watch out for. That will be a key trigger for what IT stocks do between today and tomorrow. Bajaj Finserv, Adani Port, both are trading lower. M&M Auto really is trading with a little bit of a downside bias. So largely speaking, across the large cap horizon, Tamanna, Nestle is the only one leading the pack, and along with Nestle, it's taken the other consumption names higher too. And of course, RIL, third straight day running in the green.
Absolutely, Samina. What a story Nestle is. It is at its highest level since 27th October 2020. It's added as much as 13,000 crore rupees in market cap. It's also our stock of the day, which we'll talk about in just a bit. And Nestle definitely is shining today in trade. I mean, the excitement is it's a 1:10 stock split, and 5th Jan is that record date. So becomes more approachable for retail investors in that sense. At 25,419 stock now trades in that sense is more accessible and cheaper. But I want to look at a few other counters as well. Devyani International has seen a complete zoom. Since morning, they are foraying into Thailand with their KFC brand. They're expanding its footprint there. They've done an acquisition through its Dubai unit in which it owns 51% stake. It's a deal worth $128.9 million. And that stock has had a very, very good run up through the day, and it's stayed up there. So 5.5% now on Devyani International. I just want to talk about shipping stocks because this is such an interesting story to understand why this is happening with shipping stocks. And GE Shipping is something I'd like to add apart from Cochin Shipyard and SEAMEC. So now the Suez Canal in the Red Sea is being held hostage in a sense right now because you've had Houthi militants actually attacking ships. As a result of this, there is a 10-member coalition force which has decided to protect the Suez Canal, led by the United States. Perhaps on that news and the hope of those attacks receding, you've seen shipping stocks go up, GE Shipping up 6%. And in fact, this is an international sort of trend that we've seen as far as shipping is concerned. I want to talk a bit about Sun Pharma. Sun Pharma is having quite a run. Fantastic run through the day. It's come off its highs though. It crossed 3 lakh crores yesterday, but it did hit a fresh life high on Tuesday after acquiring its stake in Lindra Therapeutics. A bit of profit booking there. A few other counters. SpiceJet, we have to talk about SpiceJet. News that we broke here on NDTV Profit. They want to make a go for Go First. That stock up 3% right now, but has been up all through the day. Orient Electric is another one I'll talk about. 7% up in trading session, down to about 7.5% now, and has seen quite a bit of volumes, 21 times its 30-day average on that stock. Apollo is the other one I will mention as well. Apollo Tyres also doing very well through the day, off its day's high, though it had reached about 7%, touched a lifetime high because they're seeking to raise $100 million through a 3% stake sale. But we're going to be talking about, what kind of a position you need to take in trade. What do you do with IT? How do you position yourself ahead of the Accenture numbers and a lot more? Samina, though, what is the broad trend that you would say you're seeing, apart from IT definitely getting beaten down, in energy buzzing massively today in trade?
Yeah, but I think largely speaking, Tamanna, it is quiet. It is a street where you are missing any sort of big sectoral moves. You've got a little bit of activity in consumption. You've got autos that are on the sell side. But largely speaking, it is still a quiet afternoon in trade. Gaurav Bisa, Vice President of Incred Equities, joins it. Gaurav, before I come to you on the big movers of the day, it's interesting what's happening today. You had the Nifty, which saw a little bit of a gap down, but now trades in gains. Broader markets have been outperforming the benchmark over the last...
I just want to point out, Samina, before you go to Gaurav, we've hit 21,500. We've hit 21,500 on the Nifty. That's a lifetime high. And that was an important position which we have come to. And I just wanted to point that out before you go to Gaurav, because I'm sure you want to talk to him about the levels.
Yeah, there you go, Gaurav. So we've got 21,500 on the Nifty on a day when it opened gap down. And interestingly, the broader markets were trading better than the benchmark in the early hours of trade. Now, that trade has reversed too. What is it that you're making of the Nifty itself and Bank Nifty as well, trading around 48,000? Open for fresh longs, do you think, at these levels on both those indexes?
Good afternoon. Thank you for inviting on the show. Well, if you talk about Nifty, it is in the overbought zone and it's trading near the rising channel. So 21,550 or 10, 15, 20 points over and above is where the next hurdle is lying for Nifty spot. Yes, today's move is actually a little surprising. To be honest, we were short yesterday. We were 100 points in the money. Now we are 30, 40 points losing on the trade. But if our view stands the same, that Nifty is having a vertical rally, it's more about short covering. So if we are closing about 21,500 today, tomorrow we'll have some more upside, so that 21,500 call writers are again trapped and they may see some short covering. But I think from here on, the upsides are expected to be limited purely because one, there's a rising channel resistance area, and second, RSI is in deeply overbought zone. So while I might not be extremely negative that 1,000 points correction will happen from here, that is something we are not expecting, but certainly the risk reward is not favorable for being long at this point in time. Now, coming back to the second question about Bank Nifty, the reason why we are seeing a spike coming in the Nifty is because of Bank Nifty also. Smart recovery from lower levels of the day. And this is one index that has given fresh breakout. As long as it sustains 47,900, 48,000 on the spot side, some more upsides cannot be rolled out in Bank Nifty. Bank Nifty is something that we may still trade. We are playing by options. We are not playing for long trades. Probably if you are buying the option, we are making some 50, 70, 80% on that particular option. We are booking out. But that is just about it. But for Nifty, my view will still be cautious at this point in time. I would not be addressing fresh longs, certainly for not a very short term.
Gaurav, so just to make that clear, you would avoid the Nifty itself, but you would consider initiating fresh longs on Bank Nifty?
Well, when we talk about fresh longs, as I said, that when Bank Nifty spot went towards 47,800, we probably played Bank Nifty call options. But that is it about it. We are already in the money. We are already out. Bank Nifty has moved beyond our exit point as well. So we are not, for Bank Nifty also, I am not bearish as such, but the trades that we are taking at Incred is also very short-term option trades, not taking pure futures. But for Nifty, we sold Nifty futures yesterday because that is trading in a very strong resistance area. Another 50-60 points and it will come at a very strong resistance area. So the risk reward is not favorable for buying Nifty futures. Whereas for Bank Nifty, if there is a correction of say again towards 47,800 on the spot side, one can play for 200-300 points rise and it can be played by means of options.
Sudeep Bandyopadhyay is also with us. He's Group Chairman, IndiTrade Capital. Sudeep, great to have you on the show on a big day. 21,500 on the Nifty. We'll have to see if it sort of manages to stay there. Okay, small slide, 21,493, but we've hit that 21,500 mark. On an otherwise range bound and quite tepid day. So though we are seeing that kind of bump up in the last bit of trade, what would be your positioning right now, Sudeep Bandyopadhyay, in a market like this? What would be the triggers that you're looking out for?
Well, I think we have enough and more positive triggers already in the market. On the back of massive FII flow, which is expected, I think market has been moving up. A bit of profit booking here and there, I think, and consolidation at these elevated levels is, to an extent, I would say, good for the health of the market. So structurally, market is in a fantastic place. And the way we look at it, the medium to long term, I think we will continue the upward trajectory. And now, specifically, as far as triggers are concerned, we will have to wait probably for the RBI to come and announce some policy rate change, or maybe the next Fed meeting in the next calendar year when there are some changes. Those will be the triggers as such. But beyond that, I think we are reasonably well positioned in terms of regular inflows into Indian markets. The other thing I would like to mention that over the last few months, we have been having a lot of IPOs coming in the market. Now, while this may seem opportunistic, the other way to look at it would be that the depth of Indian market is going up. Newer and newer companies are getting listed. So the listed universe is becoming larger and larger. So the incremental flows should get absorbed over a larger number of scripts. I think that is, again, a good development for Indian market. I think we should welcome more and more companies into the listed space. A, that brings discipline as far as those companies are concerned with the rigor of listing. B, I think the listed universe gets bigger. And of course, the incremental flows gets absorbed. So the valuations remain reasonable over a larger universe. So I think good things are happening. A little bit of consolidation and correction here and there, again, is good for the market.
Frankly, with the kind of run-up we've seen, there's barely been a correction or a consolidation. I don't know if that's yet to come. But just your take, Sudeep, and a follow-up there on two buckets of stocks today. Energy stocks, for one. You've seen crude prices trend upwards because of the Suez Canal crisis or the problem that we are seeing right now. On the other hand, you've seen shipping stocks go up despite this problem, where 7 out of the 10 largest shippers in the world have said we're not going to go through that route. So that means they have to take a longer route. What do you make of this?
I think this was unexpected lines. Look, I think if the Suez Canal is not available for the shipping companies, obviously the cost of transport is going to go up, and that's what pretty much the whole world is looking at. If they have to route the ships via Cape of Good Hope, I think it's a much elongated route, and the cost will go up anywhere between 20 to 50%. Now, if that happens, obviously the shipping companies, the number of ships required to transport similar amount of cargo will actually go up. And, this will create a demand, larger demand than what it is today. And obviously the shipping rates will go up. So there is a logic in the shipping company shares going up. Yes, it's a crisis-like situation, but some indirect benefit will go to the shipping companies. As far as oil prices and crude prices going up, I think that's unfortunate, because otherwise the signals were all there that oil prices are going to remain low for a significant period of time. This crisis again, brings back the oil prices at a higher levels, because oil transportation definitely does get impacted if this confusion continues. Of course, it's not a binary situation. U.S. Navy is supposedly offering to protect ships going through the Suez Canal and all that. We'll have to see how things develop, unfold over the next couple of weeks.
Right. Gaurav, I want to talk to you about a few big movers, and this time around they're from the large cap space. Big swings. Coal India was trading firm from the get-go this morning, but now is trading with a gain of nearly 5.5%. Volumes are also looking quite healthy. On the charts, how does Coal India look at levels of 365?
See, it's giving a swing high breakout, but I would not read too much into that. I'll still wait for some more confirmation, because if you look at daily charts, we have seen what we call as a triple RSI divergence, bearish divergence, where the prices have made 3 consecutive swing highs, but the RSI has made 3 consecutive swing lows. So in that perspective, things are a little bit confusing at this point in time. There are better stocks that I will be able to trade. If there's a follow-through buying, so for example, it closes at 365, which is the current price today. Tomorrow, once it crosses the high again, 367, 368, probably then I'll take a trade, have a stop loss of 360, play for targets of 380. But I'll still wait for some confirmation.
Deep, do you track Coal India at all? The stock has surged in trade as we speak. Technically, of course, it looks interesting, but to put this in perspective, it's up nearly 60% in the last 6 months. What is going on here?
Well, I think what is going on is the market grossly undervalued Coal India for a very, very long time. I think when this entire green energy and renewable energy, became hot, it was assumed that, Coal India is a declining company and it's going to be extinct in some time, which unfortunately very clearly is evident that is not the case. And we are going to need fossil fuel for a very long time. The energy demand in India has gone up significantly, and we have no way of meeting the demand through renewable energy in the foreseeable future. So very clearly, the demand for coal in India is strong and is likely to remain strong. I'll give you one example. Now, India now, all the villages are probably have now today electricity. Now, this requires energy production and supply. Now, this is where Coal India comes in. And you look at NTPC, newer orders of boilers are coming. The NTPC is getting, excited. BHEL, which is getting the boiler orders, is, also flying. So obviously the beneficiary of all this is Coal India, which is going to produce coal. And the kind of reserves they have, the kind of, the demand they have, I think is fantastic. Also, one has to remember two things, is that one, efficiency-wise, Coal India was not doing justice, and now the efficiency has improved significantly. The next thing I would like to say is that the auction, the realizations which Coal India gets through auction, as opposed to fixed price contract, is much better. And with that, the blended realization is improving, which is leading to improvement in margins. What we believe is that for a long-term investor, if they're looking at a steady, stable return, Coal India is not a bad bet, even after this, increase in price. Dividend-wise, also, it's a good dividend-paying company. So, for a little less aggressive investor, and for who wants to be in the market for a long term, Coal India is a good bet.
All right, we'll take a very short break. Please stay on with us, Gaurav and Sudeep. Lots to unpack as we get into closing moves. And the Nifty looking poised for a splendid kind of a close today as it's touched a fresh high. It's receded, of course, from those highs, but we'll come back with volume buzzers. There's a breaking story coming up. Stay tuned for all of that.
Welcome back. The markets are holding themselves together. 21,500 is what we're trading around. Lots of stocks that are moving the street. The likes of a Nestle, Reliance, Coal India are leading from the front. Across the broader markets, you've got stocks like Devyani, PC Jewelers. That one has picked up substantially in the last couple of minutes with a strong rally there on Devyani. 5%, PC Jewelers trading with a gain of 14.5% as we speak. Auto stocks are under some pressure. Apart from that, the rest of the market is pretty much trading sideways, to say the least. Well, Himansh is joining us now with a list of stocks that were volume buzzers in trade today. Himansh, what do you have?
Thank you. So broader markets are buzzing really, and you have quite a selective pack here with from a few sectors here really. DCM Shriram being the top gainer here. It's up on a slew of large trades that have gradually pushed the stock up 10% throughout the day. Volumes are up 22 times their 30-day averages, and from a technical perspective, the stock has breached both its 50 and 200-day simple moving averages. India Glycol volumes as well are buzzing after a 1,165 crore order for 16.65 crore ethanol liters worth of order that it received today. Orient Electric is also up and buzzing with volumes up 22 times and 9.7% gains that you're seeing there nearly. Century Plyboards, another consumer durable, rose with volumes up over 7-fold and it's also the best performer amongst its peers. Devyani International, like we've talked about today, has been up nearly 8% after the Thailand business purchase. The company has about 274 KFC restaurants across the country, and it's planning to deepen its footprint further. Other stocks from the pack have been rising on other block deals as well.
Right. Thanks for the Himansh. Lots of action and lots of stocks moving on pretty large volumes in trade. Gaurav, I'm going to come back to you on Nestle. The stock has made an all-time high. It's moving on pretty healthy volumes. Of course, the news trigger there is the stock split that is expected to take place on the 5th. Now, how would you play a counter which is announced a stock split date, gone up already 5% in today's trade? Do you anticipate and expect to play this rally? Do you think it'll continue to rally up until the 5th of Jan, Gaurav? And if that's the case, then how would you trade the stock?
Well, first and foremost is how the price action is placed in the stock, and then the other triggers follow. To answer the question, see, if you look at Nestle, it has been consistently going higher. At this point, if somebody buys, the stop losses will be a little bit deeper and anywhere around 24,300. So, if one can hold that kind of stop loss, then I think one can ride. It has already moved up. Multiple breakouts have been seen. One can keep with trailing stop losses. But one needs to take into consideration is that if you look at the overall structure, it has seen such strong upside, and whenever there is a vertical upside, the stop losses becomes steeper and steeper, and that too they are not very strong. We are talking about the most immediate support, which, like I said, in this case comes to around 24,300. So if I were to buy, I will keep a stop loss of 24,300 and ride it for next 3 or 4 trading sessions.
Yeah, Gaurav, I just wanted to, get your take on some of these IT counters, which have been seeing a lot of pain through the day, perhaps ahead of Accenture. Anything here that you think has more potential? Let's talk about a Coforge, LTIM, Persistent, some of those counters that had seen quite a breath of fresh air in the last leg of run-ups.
Well, yes, we have seen very strong setups. Some of them have seen good breakouts. So for example, if you look at Coforge, it has seen a very strong breakout at 5950 levels. So one can keep a stop loss of 5950, 6000. One can buy here a decline of another 70-80 points would also make it even more lucrative. So Coforge is one that is looking good. A very strong rounding base pattern formation breakout has been seen. If this is sustained, it can go towards 6700, 6800. So good amount of upside can be expected. Volume-based breakout was seen, so this ideally should remain as it is. However, if you talk about stocks like LTIM, while it is not looking weak as such, but it's approaching a small resistance area. So any declines in LTI Mindtree anywhere towards 5,800. I think that is where one can buy, keeping a stop of 200 points and playing for more upside. But I would not recommend buying at the current juncture. This one is not favorable, and same goes for Persistent. It has a vertical rally. The breakouts, the rounding base pattern breakout was seen at levels of 5,200, and now it's trading at levels of 7,000. So that is the kind of strong upside I'm expecting in LTI Mindtree as well. So sorry, Coforge. So I would rather stick to Coforge among the IT space at the current juncture. Even if it declines a couple of percent, it will make it all the more lucrative.
So Coforge is looking interesting. Please stay on with us. I'm going across now to my colleague Rishabh Bhatnagar for a breaking story where sources have given us details of Byju's FY22 earnings. The losses have now widened. Now these are numbers that are being looked at very carefully and have been anticipated for a while. Rishabh, what are the details we have?
That's right, Samina. Losses have swelled for Byju's. These are the first time we have any sort of sight on what consolidated revenues this EdTech unicorn is posting. Its revenues have risen to about 5,000 crores in FY22 from about 2280 odd crores in FY21, but it has missed its own guidance of about 10,000 crores that it posted when it reported its FY21 numbers. According to an AGM notice that we've seen, it is set to approve FY22 numbers tomorrow. And its EBITDA numbers have also swollen to about 6,900 odd crores. So yeah, a lot of negative numbers there for Byju's.
Yep, you will see a more detailed report there. Rishabh, thanks for that. This was Tamanna here. You'll see a more detailed report from Rishabh a little later. So do tune in to our 4 p.m. show, where you will know more about those Byju's numbers exclusive to NDTV Profit. But let's get back to the markets. It's been an exciting day. So NDTV Profit launched on the 8th of December. Just for some context, we hit 21,000 for the first time there. You've hit 21,500. So you've seen a 400-point rally on the Nifty 50 in just a handful of sessions, some 8 odd sessions. It's been a crazy run-up. Now, is there more steam left? What are we going to see in terms of sectors playing out? Those are some of the conversations we're having today. And I want to talk about the stock of the day, Nestle, which has, for an FMCG counter of that size, it doesn't usually see this much of a movement. Look at Nestle. When is the last time you saw Nestle nearly 5% up? And not since 2020 have these levels been seen, or this kind of a run-up been seen. What was the news trigger? Well, the stock split record date has been announced, which will be the 5th of Jan. And which is why perhaps you're seeing this. The ratio also is interesting, 1:10. I want to go across first to Gaurav Bisa on Nestle. Is there any kind of strategy that you can place over here?
Done.
Well, if you look at Nestle, as I said, it's seen a very strong upside, and we have seen good amount of volume participation being added over the rise that it has seen. And in the current junction, 24,200, 24,300, it's the good support area, and that is the previous swing low. So whenever it's stock in the uptrend, forming higher tops, higher bottom, the previous swing low becomes a stop loss. So if somebody is buying here, I would recommend keeping a stop loss of 24,300 and riding the trend.
Right, that's the call coming on Nestle. Sudeep, what are you doing with Reliance Industries? It's taken a while to start playing catch-up, and I'm hoping it's a catch-up because the last 3 days have played out quite well for Reliance Industries. Gaurav, will come to you on the charts of RIL in a minute, but fundamentally, any triggers for RIL?
Well, there are plenty of triggers. In fact, we have been pretty bullish on Reliance for quite some time, and we believe that some of the reports, brokerage reports have come out today, which are pegging Reliance valuation at 3,000. But we also believe that Reliance deserves a better valuation. Somehow the stock was languishing, and there was not much happening in Reliance. And now only it has started moving. Fundamentally, 2-3 reasons. One is, I think, the consumer-facing businesses have started doing exceedingly well. Look at Reliance Retail. That's the largest retail company in the country, and definitely deserves a better valuation for that part. Look at the telephone business, telecom business, Jio. I think again, it's a fantastic business. Yes, there are a bit of a challenges as far as ARPU not going up. But again, the number of customers they are gaining, the way they are penetrating the 5G segment, also the way they are getting the conversion done from 2G to 3G and 4G. I think all this put together, it's a fantastic business. So these two businesses together have started contributing significantly to the overall Reliance kitty. Now the trigger can come in terms of value unlocking of these businesses from the overall Reliance, either by way of separate listing or some such other structure. We believe that it's a matter of time before that happens. Now, apart from the consumer-facing businesses, the green energy business, which Reliance is developing at a significant investment, also has significant potential. And again, that is going to be another value unlocking opportunity. The core business, of course, oil and gas, that's doing well at this stage and will continue to perform. So overall, I think Reliance valuation from a long-term investor's point of view definitely looks very good at current entry levels.
I want to get your take, Sudeep, on Nestle as well. I want to come back to Nestle, which is our stock of the day. Mahima has put together some interesting data on Nestle and why it's being watched so carefully today. Yes, Mahima.
Right, Tamanna. So as you rightly mentioned, they've declared the record date as 5th Jan 2024 for their stock split. The ratio, as you rightly mentioned, is 1:10. And this is the first stock split ever. And if you see, it is interesting to note that this is the biggest, highest intraday jump since 27th October 2020. And today itself, it has added a market cap as much as 13,000 crores. If you see, and if we talk about the stock performance, currently the stock is trading at 25,000. So after the stock split, if we see, the stock price will come down to approximately 2,500, and the stock has gained over 4.3% in the past 1 month and 11% in the past 6 months, and YTD the stock has given approximately 30% of return. Now, just to throw some light upon what this stock split means for investors, basically, like I mentioned, since the ratio is 1:10, the stock price will reduce 1/10 of its price, and the number of shares will increase from 9.6 crores to 960 crores, and this will basically make the scrip much more affordable for investors, and the liquidity for the counter will increase. The market cap of the company, the valuations of the company will not be affected, and the EPS metrics will go down. However, in the hands of shareholder, the EPS will remain the same because the number of shares will increase. And overall, if we also see, the volumes and the intraday trade will go up because the stock price will come down. So this is what the stock split means for investors.
Right, that explains fundamentally the reason why you're seeing Nestle rally up the way it does. Trading at its day's high point. We'll take a break. We've got about 21 minutes to go as we start winding down trade.
India market close and just about 20 minutes away from winding down what has been a fairly calm day, apart from, of course, the 21,500 milestone, but off those highs right now. A bit of resistance coming in at those levels very clearly for the Nifty, which has slid down in what has been a range-bound day of trade. But Agam is now with us talking about the F&O data coming in. Yes, Agam?
Right. So it's something that we've been discussing over the previous few sessions, that 21,500 will see a bout of resistance. That's exactly how things are planning out right now. It doesn't mean that the Nifty won't go above that mark, but at least in the near term, because of the fact that there has been so much accumulation and open interest around that level, well, we are likely to see some amount of resistance there. That said, we're still advancing for now, 0.25% higher for the index, and we see a near 12% added in open interest towards fresh longs. As far as the Bank Nifty is concerned, it's turning out to be, well, a marginally positive day, but here again we have seen an increase in open interest. Do remember, these numbers will change quite a bit in the next 15-20 odd minutes as we move into the closing for today. As far as the Nifty option space is concerned, something that I was telling you, that we still have the most amount of accumulation and calls around 21,500, which is why we're seeing that resistance coming through. But eventually, over the next few sessions, should we open above that and perhaps sustain above that, there will be about a short covering as far as that particular strike is concerned. Today's day of trade was once again a day where a lot of these traders, in fact, took it as an opportunity to go and sell the 21,500 call. Now, let's talk about stocks. And in terms of stocks, we're not looking at too much, except for something like an Apollo Tyres, which is now under pressure. It's turning into red and green, so we're looking at marginal moves there. But Delta Corp, Nestle, Metropolis and Shriram Finance, all of them looking at fresh longs building up. And in terms of unwinding, we're seeing longs unwinding in Deepak Nitrite, REC, JK Cement and Coforge. Ramco Cement, on the other hand, seeing about a short covering. It's a mixed market, at least as far as your broader space is concerned, but coming down the benchmarks, perhaps on expected lines, a quiet day of trade and resistance at around 21,500.
Right. Thanks, Ragam. On expected lines, of course, we saw a pretty solid reversal from market opening today. Nifty trading around levels of 21,500. The theme today, Gaurav, is buy consumption, profit book, PSU and metals. In the metal and PSU horizon or universe, would you use today's weakness to initiate longs?
Well, we have added some longs in Tata Steel, and we have seen a good breakout, and since yesterday we are seeing minor amount of consolidation happening above the breakout area. It is sustaining those levels. So while we are positive on certain pockets of metal space, I would not recommend buying positions in each and every of the metal names. For example, any small decline in Hindalco would be a good opponent to add, but I would not buy JSW Steel or Jindal Steel for that matter. Tata Steel remains good. So yes, we will buy selectively. In terms of PSU, it's a very large basket, spanning from banking to engineering, OMCs and other companies. So again, we'll be selective, but we have added some amount of positions. So for example, we have been a buyer in Hindustan Copper today. And we are not very aggressively buying for short term, but for long term rather. So that remains a good buying area for us. But we would not recommend touching banks. So any declines in SBI towards a 635, 630, that would be a buying area. That is only giving a good breakout area, but not certain in the current juncture. So yes, there are certain stocks that are looking good. Certain will wait for a decline to add fresh. The structure is still intact, they're still positive. We are seeing just a small consolidation which has been followed by fresh breakout.
In fact, Hindustan Copper is one of the few counters in the metal universe that's trading firm. It does trade at 11-year highs, so you're seeing a lot of activity on Hindustan Copper this afternoon. Sudeep, what are you making of some of these metal names? Is it an opportunity to play in any of these counters? They have been underperformers when compared to the rest of the market. There is that stimulus expected from China. Demand hopefully should get better. Lots of green shoots, but nothing's playing out just yet, right? Keeping that in mind, how would you play some of these metal names? Anything that you've bought in the last few weeks or you'd be looking to buy right now?
No, you're absolutely right. A lot of green shoots. Nothing concrete has yet happened as far as China's stimulus is concerned. But what has happened is, very clearly US interest rates are not going to go up. Probably they'll start coming down. That's positive for metals. Also, I think the dollar index coming down is positive for metals. And there is a strong expectation that China definitely needs to do something to kind of pump prime their economy. So there is an expectation in the offing. Under the circumstances, metal pack in different countries and even in India is getting excited. I would say that, from an investor's point of view, I always advise that metals is an extremely volatile sector. So, you need to be an aggressive investor to play this game. But if you are, what I recommend is buy into Vedanta. I think, we have seen enough negative news around Vedanta, including the, debt-related trouble of its parent company and probably the intention to exit from some of the subsidiaries to cover the debt and, ensure the repayments and so on and so forth. Also, the corporate governance at Vedanta had never been something which was, probably exemplary. So under the circumstances, Vedanta had seen a lot of challenges, but considering where the prices currently are and considering that the metal pack probably see an upswing very shortly, an aggressive investor can definitely look at Vedanta at current levels. But the counter needs to be monitored very, very carefully. You can't buy and forget it because metal inherently is a volatile segment.
Yeah. I just want to look at a couple of counters which have seen an interesting news spike. India Glycol is one of them, and we put them in our watch list this morning. It has got an ethanol order worth about 1,100 crores from OMCs. That stock has done very well through the day. Let me go to Gaurav if he has any kind of a view on India Glycol. And Gaurav, also because we're talking about ethanol and that whole play, any of the sugar stocks that are, if they are on your radar?
To answer our first question, India Glycol, this has been one of the stable names, and we have seen a major breakout retest happening, and that is keeping the prices quite intact. As far as short-term trading is concerned, I would recommend buying fresh, not the current junction, but slightly higher. Once it sustains above levels of 770, 775, there's a falling trendline breakout that can be seen, which can push it towards 825, 830. One can keep a stop of 750. So not buying at the current price of 755, rather you wait for another 20 points to add, and then there will be a good breakout sort of coming in. So India Glycol is a add, but at slightly higher levels.
Talking about another big mover, Gaurav, is PC Jewelers. Do you track that one?
No, we don't track that.
Well, that stock is up and about. It trades with a gain of nearly 19%. So it is trading at its day's high point as we speak. Sudeep, we've got a barrage of listings and primary market activity. Any IPOs that you've subscribed to or would look to subscribe to in the next couple of days?
Well, I think, out of the current lot, which is ongoing, Muthoot Microfinance definitely looks good. I think this is, entire microfinance sector is going through an upswing, and we believe that next couple of years, I think, should be very good. The fundamental problem around asset quality post-COVID, I think, is behind them. And Muthoot Microfinance in particular is growing, and they have a decent book. The margins and all other parameters may not be top class, but they are definitely worth considering. So I would definitely look at applying for Muthoot Microfinance IPO. Also, I would say that the allotment may or may not come for a retail investor, even if they apply today. But if post-listing it quotes around the same level at which the IPO has come, it is definitely worth buying. Considering that microfinance sector is going to go through an upswing, even other microfinance companies which are listed are doing pretty well. So this should see good traction. Out of the other companies which are currently IPO is on, the jewelry company which Moti Sons, obviously there is a lot of traction. You were just mentioning about PC Jewelers. We have seen Kalyan, we have seen Titan. I think the entire jewelry sector is buzzing. So they will probably see good amount of subscription and good listing. But I don't know, it's a very localized player. So I won't like to take a bet on that counter, without, the establishing track record on a pan-India basis at this stage.
Do you have any views, Sudeep, on DOMS that's listing tomorrow? as well, and saw a pretty decent traction as far as the subscription numbers are concerned.
Yeah, it's a good IPO. In fact, we had recommended a subscription, so I'm not sure how many of our clients did get allotment. We expect a good listing, and post-listing it should do well. The price at which it came was also not exorbitant, and there was something we believe left in the table for the investors to gain out of it. Let's see how the listing goes. With the kind of market we are witnessing now, I think the listing should do well.
Right. We've just going to take a quick check of the dollar-rupee pair. It was a strong sort of session on Friday, but there's been some weakness on the currency since then. We've broken about 83 and 83.17 is what you're getting. We believe there have been some selling pressure coming from FIs, so that, of course, equity market exits could be one reason why you could have seen a demand for dollar going up and the rupee getting a little dumped. So that could explain why you're seeing a weaker rupee this afternoon, pardon me. 83.15 is what we're eyeing, and that's pretty much what the currency should be wrapping up at in today's day of trade. The yen as well has been in focus. Bank of Japan kept its interest rates unchanged, and that currency pair has usually got quite a direct impact on how the euro dollar or the dollar rupee actually play out. So pretty much moving in line with other emerging market currencies. Gaurav, we've got another 10 minutes to go before we start wrapping up trade. Any sort of stock picks, buy today, sell tomorrow trade calls? You've already talked about Tata Steel, but anything else apart from that?
Bandhan Bank is on the cards. Bandhan Bank has seen a good breakout on weekly charts. We are yet to see a follow-through buying, but it's clearly holding above the breakout area. And we have seen this stock yet to participate. So if there's a uptick sort of coming in, I think we can see good amount of upside in Bandhan Bank. It can go towards level of 265. So one can buy keeping stop loss at 240.
Sudeep, just, your kind of a take on trade today. Would you be looking at any of the IT counters ahead of Accenture? Would you be looking maybe any of the consumption FMCG plays?
Well, as far as IT is concerned, Accenture results will be announced tomorrow and all that. But beyond that, I think the way the US Fed chair came and made the announcements, and it was very clear that they are not anticipating any recession. So obviously, I think US growth is going to be back on track, and that will ensure that large Indian IT companies start getting those orders which were pending, or the projects which were stalled will get going once again. So that's good news for Indian IT companies. The view is as follows: if you're an aggressive investor, take a bet on Wipro. I think this is one company which has been beaten down. They are much cheaper compared to the peer group. There is a buzz around probably a management change or some restructuring. Now, all this is negative news. But under the circumstances, we believe that this is where you will probably get the biggest benefit if you buy today and with a 6 to 12 months time horizon in mind. If you're a little less aggressive investor, go for HCL Tech. I think that's a very, very safe bet, and that definitely can be acquired. Yeah. As far as FMCG is concerned, we believe that, leave aside the buzz around Nestle because of the split and all that today. I think fundamentally, the two companies which have significant presence in rural, presence which is more than others, which is HUL and Dabur. Now, rural income challenges, all that we have been hearing for last 12 months, we believe that somewhere things are changing, and HUL and Dabur will benefit disproportionately from this change in rural demand. And that's the reason why we are recommending buy in HUL and Dabur.
You mean for the better? And Sudeep, any view on Nestle? Is that stock split looking, enticing to you?
Absolutely. I think, you see, when a stock reaches the kind of level which Nestle had reached, it goes beyond the reach of retail investors. Now, I think they have done it very smartly. 1:10 split. It actually will be, regenerating the entire buzz around Nestle. Of course, we talk about Nestle, we talk about MRF, we talk about all these pricey scripts also. But if you talk to a retail investor, he will be not interested in buying Nestle because it's too pricey. If you ask me arithmetically or scientifically or logically, there may not be any reason, but that's the psychology. And with the split, Nestle will become much more affordable. The trading volumes will increase, as your colleague was mentioning. I think the market cap eventually of Nestle will go up significantly. And yes, if the record date is 5th, if somebody is buying today Nestle or tomorrow Nestle, I think they will benefit in 6 to 12 months' time.
The price tag always makes a difference. I just quickly want to address some news coming in on SpiceJet, another counter which has been buzzing all day and on various news flows. So we know that they're trying to make a bid, or they are interested in bidding for Go First. But the High Court has also said that it will hear the engine lessor's plea against SpiceJet on Jan 4th. So SpiceJet owes money to at least 2 companies from where they lease out their engines. They owe about $13 million odd. And these companies actually moved the High Court to recover that money. The High Court has told SpiceJet that how will the company actually pay back those dues, liquidate engine lessors' dues. So SpiceJet has come and said that they will pay $450,000 to 2 companies by the 3rd of Jan. That stock has been up on news that it wants to make a bid for Go. Just on the charts first, let me come to Gaurav on SpiceJet, and then we'll come to the question of whether they can actually afford to go and buy out or make good what Go First owes its creditors. Yes, Gaurav.
Well, you've seen a very strong spike sort of coming in. Overall, if you see a weekly charts, it is still in formation of lower tops, lower bottom. I would not recommend buying, fresh over here, but if somebody has bought, can keep riding it. For fresh, I would recommend still say any 2-3% fall in Indigo would make more sense to buy. The structure is very clean. Rather for here, it's more about Claude for last 15-20 years, so it's done nothing rather. So I would not recommend buying fresh, but somebody has bought, can keep holding it.
Right. If you have the stock, hold it. It's the ailing reviving the dead. The stock, of course, is trading flat in today's day of trade. Gaurav, do you track Z at all?
Yes, I do.
What's the call on Z? It's been a little volatile. Today, of course, is a soft trading day for the counter, but looks like a trade here. Any sort of derivative strategy, if not just a plain vanilla one?
See, right now is not a time that one should be looking at either for long or short. For the reason is that if you look at the daily or if you look at the weekly charts, it's forming a triangle pattern formation. And even if you ignore triangle, there's a 5-year trend line, falling trend line breakout on the cards. Once it gives a close above levels of 295 or 293, that time it would be an interesting buy. It can go very rapidly towards 350, 360. I'm waiting for that, and there's no point in preempting, especially names which are plagued by a lot of news developments. So in my opinion, it's a avoid at this point in time. But once it gives a close about 293, 95, it should definitely be on the radar.
Right. That's the view coming in on Z Entertainment. The stock, remember, trades at 271 under heavy selling pressure this afternoon, nearly 4% off on the. So, Deep, what are you making of this? The recent news development with the back and forth on the Sony Z merger has kept the stock pretty weak, actually, more under pressure than on the way up. How would you trade this one? How would you invest in this one? Would you invest in it? Would you use this opportunity as, a buy sort of call on the counter?
My view is as follows. I think the merger would have been great. Now, this is a binary event now. Now, they are asking for time. The question is whether the merger will happen or not now, and whether Sony kind of agrees or not. So it's an extremely, a challenging situation from an investor. But if you have nerves of steel, I think you go ahead and pick up Z. Because the way I read it, it's difficult for Sony also to now go back on this and look for a different target or do something else. They are so much into this. And obviously, Sony's merger will take Sony into a different level in India. So my view is that, as I said, if you're an aggressive investor having nerves of steel, go and invest in Z Entertainment. Otherwise, don't touch it.
To ask you for 2 to 3 stocks that you really like, even right now, for the medium term, short to medium term, what would those be?
Well, Reliance Industries would be my top pick, absolutely, as I said. The second stock which I like amongst the large cap is Larsen & Toubro. I think, again, it's a great stock. It has moved up quite a bit from where it was, but in spite of this, I do see that there is significant upward potential from here itself. The margin profile of the company itself is changing. As opposed to low margin domestic contracts, they are gaining more and more international contracts in Saudi and other places, which is high margin. So with the margin profile changing, with Larsen & Toubro continuously exiting unrelated businesses, non-core assets, the working capital management and margin profile again gets a boost. So overall, I think we are extremely positive on Larsen as well.
Just last calls here, Gaurav, as you're seeing the markets paring down, and actually the IT hit deepening where we are closing down on trade, and I don't know if it's the Accenture impact or what it is, but you are seeing IT really feeling quite a bit of pain. So are your metal stocks, so is auto. Let me just talk to you a bit about auto. Gaurav, any kind of strategy is there in your auto counters?
Well, many of the auto stocks have seen good breakouts, and I think these are buy-on declines. For example, Hero Motor, any decline towards 3650, 3700 is a good buying opportunity for targets of 4,000 and above. Similar is the case with Bajaj Auto, where we have seen good amount of upside coming in. It's still sustained those levels, so 2 or 3% decline can be a buying opportunity. So selectively, pressure is seen in names like Maruti, which again we are seeing trying to break down. So in my opinion, apart from Maruti, other stocks are stable. They are buy on declines.
On Maruti. Well, thank you so much, Sudeep Bandyopadhyay and Gaurav Bissa, for joining us on the show this afternoon as we close down trade. Pleasure to have you as always. But just with a couple of minutes left, we have to see where we are now closing for the day, and we're back to very flat levels, Samina.
Yeah, Tamanna, it was that kiss and tell, literally, on the Nifty. We touched 25,500, but finally going home as flat can get, 21,450. Bulls will, of course, take a heart from the fact that we did a pretty good U-turn from where we started trade this morning, which was in negative territory, but as the day progressed and Europe opened up, Nifty actually goes home with a marginal gain this afternoon. The Sensex closes pretty much in line the Nifty 50. No surprises there. The benchmark both trading and ending or will end in positive territory. Bank Nifty is going home flat. This also has been fairly volatile and traded in a tight range, but of course it has been trading closer to levels of 48,000, not being able to close above that today either. The Bank Nifty goes home on a flat note. Broader markets have underperformed the benchmark. Last 2 days, in fact yesterday and Friday, what we saw is the broader markets were outperforming the benchmark. Similar sort of setup this morning, but by the time we've wrapped up, the broader markets have ended in negative territory. The small and the mid-cap space both going home with a small cut in trade. Amongst the big gainers and losers, there was buying activity that lifted the Nifty actually from the large cap space. So yet Coal India was trading positive for most part of the day, but the last 1 hour saw the counter gained about 2.5% to 3%. Nestle is going home with very solid gains, 5% higher. NTPC not too far behind, 2.5% there. Tata Consumers, Reliance Industries on the third straight day, SBI, ITC, Apollo Tyres are some of the heavyweights that have seen gains anywhere in the range of 1.5% to 3.5% to 4%. On the sell side, there was profit taking across some of the auto names. Pharma, counter like Sun Pharma was slightly weak. Metals did see a bit of a subdued day of trade, barring Hindustan Copper, which went home with a gain of 14%. But largely speaking, muted day. It was stock-specific action. But Tamanna, it was the large cap guys that actually made their way and helped the Nifty end in positive territory today.
Just about on the positive territory, but the action has continued to be news specific. I'm just going to take you through some of the stocks on our watch list through the day, and India Glycol is one I'll talk about first, which has ended about 8.5–9% up on an order win. GE Shipping nearly 7% up, and yeah, looks like it's ending also nearly 7% up despite problems in the Suez Canal. Devyani International on our radar since this morning because of their foray. They're going to bring KFC to Thailand, not bring, but they're going to acquire a portion of a company that has KFC in Thailand. So they have been doing pretty well as well. Let's look at SpiceJet and Z, also companies that we've been tracking through the day. Z Entertainment ending about 3.5% down and feeling all of that pressure coming in. Among the biggest losers have been IT stocks, and they have been persistently seeing that kind of a pain, perhaps ahead of what we will see in terms of Accenture numbers. Just a couple of numbers, a couple of counters I want to talk about before we wrap up for the day. IRFC, what a run-up that stock has had, closing up about 6% today as well. Now, that's all the time we have on India Market Close this afternoon. From Samina, me, and the entire team that puts the show together, thank you so much for watching.
Hello and welcome. You're watching NDTV Profit. I'm Smriti Chaudhary, and today we're joined by Prashant Singhal of EY, and he looks at emerging markets technology, media and entertainment, and telecommunication, along with Dr. Satya N. Gupta. He's the ex-principal advisor to TRAI. And we're going to talk about the new telecom bill that was laid in the parliament yesterday. So, welcome Mr. Singhal and Mr. Gupta. We're going to start off with general view, just an overview of what you thought of the bill. Mr. Prashant, thoughts on the bill that was laid yesterday, and also if you can point out the differences that the government has now made after talking to the stakeholders. The first draft came out in 2022, and now the bill that was laid in the parliament. Do tell us if there are any differences that you, important differences rather, that you thought were included in the bill this time.
Yeah, so hi Smriti, thanks. Happy to be a part of this show. The bill is very progressive, and I think it's important. It lays the foundation for the next maybe 2 decades or 3 decades of growth in the telco sector. I think in the past we've seen a spurt of growth, at least over the last maybe 10 to 15 years in the sector. And I think with this bill, if it gets passed the way it is, then we'll see it kind of lays the foundation, as I mentioned. I think one of the biggest changes, which everybody knows, is on the OTT, which were expected to be covered within the telecom services, and now or some kind of registration or licensing. I think that's been excluded. And I think there are some other big changes which are there in the bill, which is a graded penalty structure which has come in. We'll talk about that a bit more. I think the change of USO fund to Digital Bharat Nidhi, I think that's another big change where more funds would be available now for the purposes of R&D, and that R&D is not restricted to just the rural R&D. That R&D is for telecom services or larger telecom services across the country, and innovation and research and development there, including digital aspects. Sandbox approach to technology. I think that's another big change or regulatory, which will then test more and more technologies. And then on the ROW side, I think it's a very good clarification which has come in, where telecom infrastructure will not be treated like a property, and hence the levy of property taxes or municipal taxes would not be there. So that would take away a lot of pain that was caused on something which is really important for essential services, i.e. telecom, in terms of infrastructure. I mean, there are many more changes. As I said, we can talk about that in more detail, but I thought these were some of the highlights.
Right. Dr. Satya, first views on the bill. How are you looking at it? Positive for the telecom sector?
Yeah, thank you, Samriti. Yeah, it goes without saying it is very, very positive for the telecom sector and also for the consumers of the telecom services and public at large, actually. And also it basically is very futuristic. It takes into account the new technological developments which are happening day by day and making the network very, very complex. So for that, they had to actually repeal the 3 old bills, archaic bills, which were there from 1885, 33 and 53 acts were there in Telecom, and they have actually become more or less outdated, though some feature of them are still surviving. So the government wanted to make it futuristic, to take into account the technological development and also some of the burning issues or problems which were unable to be solved out through the existing legislation. And there were a lot of litigations were happening actually. So with that objective, the government have brought this bill actually. And as you have asked, that there was a draft, of course, last year also, and a lot of public debate happened. The draft, of course, some few main changes, of course, Prashantji have already mentioned. One was about OTT, over the top services, which is more like broadcasting, content services, and not per se the basic telecom services. So the status to them actually in the earlier draft, they were to be regulated like any telecom service. So it has been, of course, not fully clarified, but at least it had been done away with. So there is no mention of OTT in this bill, and that means that they are not being considered under the regulation here. So that is one big thing which has happened from the earlier draft. Also, there were no mention about these new thing like sandbox, it all, where they actually permit some trials, some POC, some R&D, and to provision of some services for a very limited period by using some innovative technologies for which there may not be any permission in the existing rules and regulation. So that can be done, and it is a big thing actually for encouraging the startups and new innovative business models also. So that is another thing. The one different thing is in the original draft, actually, as all know, there was a mention about the TRA, and there was a feeling that government wants to reduce their powers or reduce their roles, actually. That have been done away with, actually, but they have mentioned little bit about the TRA, especially they have clarified about the chairperson and members of the TRA, who can be appointed, what is the eligibility criteria, and also they have made it very clear now from the private sector also experts can be considered, provided they were there in the board of directors or the chief executive level of a private company, and number of experience have also been added, actually. In addition to that, they have also tried to solve one very big problem which had happened due to that auction mandate of the Honorable Supreme Court, and government was basically bind that whether to auction or not to auction, because in some applications, some special cases, and especially for satellite, you cannot auction the spectrum actually, and nowhere in the world the spectrum is auctioned. So in this bill, actually, they have tried to do away with that, and they have, of course, approached the Supreme Court otherwise also. But if they are bringing through this bill and making it a law of the land, then it can be done also.
Right.
Actually.
So, but don't you think? Sorry, don't you think this is a dilution of powers of TRAI when the government kind of takes it upon itself to allocate auction, which was till now TRAI was holding these auctions and there was bidding happening and all of that. In a sense, do you think this is a dilution of powers?
No, Smriti. The auctions were always done by government earlier. Also, TRAI was just a recommendatory body.
Right.
Actually, so from that sense, they have not done any dilution because those powers were still with the government only. Whether to auction or not, whatever way you assign the spectrum, it was still a government activity. Actually, it is not there with the TRAI. So that way, nothing has happened as far as TRAI is concerned. It was a Supreme Court dictate that you have to do auction for excess spectrum. Those were back all, they were not that restrictive. But now it has been clarified that government for the particular purpose, and they made a schedule also in what cases they can actually do away with auction and do what is called administrative assignment of the spectrum. Satellite access is one, but there are many other like government services, the public uses for R&D, for academic purpose, for non-commercial purpose. So many, there is a full schedule of the exceptions to the auctions. So that is one good thing. But it has not diluted anything from TRAI side.
Okay.
That you must be clear.
Got it. Prashant, talk to us about who will benefit from this change of government now allowed to allocate spectrum. What kind of players do you think are going to benefit from this specific provision?
Yeah, so Smriti, I think with the GMPS players or the satellite players who want to offer satellite telephony in the country, and I think we are hearing about a lot of LEO satellites which are being launched, or the orbit which is already the constellation which is already there. They would certainly benefit in terms of having a lower outlay for providing that cost, providing that service. Ultimate beneficiaries would be the people at large, because now they would be able to get broadband services in far-flung areas or terrains which otherwise you can't go deploy fiber on, or where the reach is not possible because of the network or the density of the network. So the terrains like forests or deserts or some of these terrains where it's difficult to go and roll out services, and satellite was a good medium through which services could reach. I think those people will get broadband and experience broadband services. Apart from that, marine airlines were anyway covered or was anyway considered for the purposes of satellite, but I think that may also benefit if there's no spectrum charges which are to be paid and it has to be administratively allocated. So I think it is I mean, it's not just about saying that there's an industry, a section of the industry would gain, but the way this industry operates, as we all know, that whatever is the benefit that the industry gets, it gets passed on to the consumers. Eventually, it is the consumers who have benefited the most out of the entire services in India. The reason why India is still the lowest tariff country, the highest data usage.
Also, if you look at the definition of telecommunication services, like Dr. Satya also mentioned, they have removed certain words, but it still kind of remains a little vague. From your understanding of the bill right now, do you think digital services, maybe the likes of Meta, WhatsApp essentially, and Signal and OTT, does the bill still covers that?
Yeah, I mean, if you read the definition, it means transmission, emission, or reception of any message by wire. I'm not reading, I mean, I'm just reading that out. But effectively, whether it's Meta or WhatsApp, WhatsApp on its own cannot provide that service. So the transmission happens through connectivity, and that connectivity is through a telecom network, right? Could be a Wi-Fi network, or could be a telecom operator network, which is a mobile data network or a broadband network. So that's the way the emission is happening. Of course, I mean, and that's the way it is right now. So WhatsApp or Meta, or these are the applications through which two people get connected who are on the same application.
Right.
But the signaling but they need to have that network for passing the signals, and that is really the telecom service definition. I mean, that's the way I read it. I'm not an expert lawyer, but that's the way I read it.
All right. Now we'll slip into a short break, but we'll be back with a lot of more questions for Mr. Prashant and Dr. Satya on this. Stay tuned. Welcome back. You're watching NDTV Profit, and we're joined by Dr. Satya and Mr. Prashant from EY, and we're talking about the new telecom bill that was laid in the parliament yesterday. Dr. Satya, on this, now that Prashant says that the likes of Meta and Signal and all of these organizations will now have to maybe go for an authorization. Now, the words used are authorization now, but from what I remember in 2002, the words were still license. Is there a difference between that from license versus authorization, and how does it work?
Yes, Preeti. Actually, the difference, in fact, as far in the government lingo, there is no difference. Actually, the government can authorize or license. Only thing is, earlier in the license, it was mentioned it should be for a consideration. That has been removed. So whether government authorizes or licenses, there is no difference. It is one and the same thing. But about these Meta and these Signal and all that, actually in the definition, of course, they have removed the specific mention, explicit mention of OTT. But of course, any messaging also is covered in the telegraph or telecommunication. Instead of telegraph, they have used the word telecommunication now. Earlier bill was telegraph, and there they have mentioned messaging. So if you talk of WhatsApp as a service, then it is covered in the messaging. But OTT per se, which was there in the draft, mentioned in the draft, now that has been taken out, that has been deleted. So by deleting that, the government intention becomes very clear that they themselves, through this bill, they don't want to regulate OTT, but there will be other bill, and that is the Digital India Act will be happening, a separate bill, and it can find place there. So there will be different regulator as far as OTT kind of thing. But WhatsApp, it is still a messaging, and messaging is still a clear part of the definition in this bill also. So that way they cannot be done away with. But whether they will be asked to be authorization or licensing, that is also not very clear, and that will be the government, you can say, take. In addition to the definition, the difference what you had asked, the broadcasting services they have removed. In earlier draft, broadcasting services were included in the definition. So that has been removed, like OTT has been removed.
Right. Prashant, also, last year when this draft came out, a lot of telecommunication companies talked about a payment service company like Paytm. For example, Paytm, even though it's a payment services, their argument was that it's still free for messaging. Like two people can still message to each other, even though it's a payment service company. Does that also come into the purview of this bill?
Yeah, I mean, see, if messaging is going to come in, then of course, because when you send money on the Paytm platform or the PhonePe platform or any of the fintech platforms, you have the ability of adding messages around it. It could, but as I said, I mean, is it really the messages? Can Paytm send the message on their own? The answer is no. So one needs to see on the interpretation whether the transmission, emission, or reception without that they can't do, right? I mean, they can only do that by having a connectivity which is between with the telecom operators, or the consumer has to have that connectivity. Paytm on its own is not giving that connectivity. So if I'm not connected to a network, I can't go and send the message on Paytm. Now, does it mean that it gets covered in this bill or not? I mean, that's maybe a question for debate and interpretation. On its own, it can't.